Today is Wednesday, July 20th, 2022. Let us take a look at today's crypto headlines. Bitcoin may hit $120,000 in 2023, says trader as BTC price gains 25% in a week. ZipMex suspends withdrawals as CEO denies financial trouble rumors. A senator blasts second for non-judicial actions against crypto companies. US federal agency issues legal advisory on NFT investments. Tesla sold 75% of Bitcoin holdings in Q2. Bitcoin hodlers will soon see why $21,600 BTC price pump is fake, trader. Please like, subscribe and turn on the notification button to keep supporting our channel. Bitcoin may hit $120,000 in 2023, says trader as BTC price gains 25% in a week. Optimism is flowing around Bitcoin price potential, but warnings also point to intense correlation with stocks. Bitcoin, BTC, touched $24,000 at the July 20th Wall Street Open as the good times kept rolling for crypto markets. BTC price rally all macro-driven. Data from TradingView showed BTC/USD passing its latest milestone after a brief consolidation. "24-hour gains for the pair remained at nearly 8% and weekly returns near 25% as Bitcoin and altcoins benefited from a declining US dollar and rising stock markets. Bitcoin's rise had seen bulls reclaim key trend lines lost in June, but the jury remained out on whether the newfound strength could endure beyond the current weekly candle. Bitcoin rally looking good? Yes. But BTC shall take no pride in this rally, analyst venture founder commented. BTC and Nasdaq correlation is still at 91%, historical high, and both of which are looking at the Fed policies, interest rate and recession concern forecast and $C for guidance. All is macro-driven. The US dollar index, C, nonetheless showed no signs of staging its own successful recovery on the day, getting rejected at 107 after a local bottom. Popular trader and analyst Josh Rager, meanwhile, demanded a confident tip to the $30,000 zone in order for Bitcoin to truly flip from bearish to bullish. Metric predicts up to $120,000 in 2023. Zooming out, one Bitcoin price indicator led analyst TechDev to believe that BTC/USD would see a new all-time high before its next block subsidy halving in 2024. TechDev flagged the True Strength Index, C, for Bitcoin, a metric that uses several base calculations to determine how overbought or oversold the asset is at a particular price. The price decline since the last all-time high in November 2021 remains on trend, he argued, and thus the potential for historical patterns to repeat themselves. A recovery underway in Bitcoin's Relative Strength Index, RSI, additionally caught the attention of stock-to-flow model creator Plan B. Breaking, ZipMex suspends withdrawals as CEO denies financial trouble rumors. The CEO of Thai crypto exchange ZipMex denied rumors of financial trouble just moments before the group announced it would pause withdrawals on the platform. Thai cryptocurrency exchange ZipMex has paused withdrawals on its platform following a combination of circumstances beyond its control. Cointelegraph reports that ZipMex could be in trouble were dismissed as rumors by CEO and co-founder Marcus Lim following the failed acquisition of the Thai exchange by Coinbase. Coinbase made an offer to acquire the Thai cryptocurrency exchange ZipMex early in Q1 2022. On June 9, the acquisition fell through. Instead, Coinbase made a strategic investment into the company. The amount has not been disclosed. Lim said that while Coinbase is an interesting partner, an investor makes more sense at this stage. He explained that the group speaks to a number of different parties at any point in time, citing the bear market as the reason why Coinbase opted out of the acquisition. The acquisition fell through due to market conditions. They've pulled out in many countries around the world such as Turkey and in Latin America. Coinbase is a great strategic partner to the business. According to the block, ZipMex is working on a Series B+ raise that could value it at $400 million. ZipMex has compliant operations in Thailand, Indonesia, Singapore and Australia. In August 2021, ZipMex's user base reached 200,000 while it has reported over $1 billion in gross transaction volume since its launch in late 2019. According to ZipMex press releases, the company's Thai subsidiary has a digital assets exchange license and brokerage license issued by the Ministry of Finance of Thailand. While the group is regulated by the Securities and Exchange Commission. However, a source close to the exchange explained that ZipMex could be in trouble prior to freezing customers' funds. According to the source, who chose to remain anonymous, ZipMex has a Thai exchange license and an exempt status in Singapore. Under the Thai license, they are strictly not allowed to touch customer funds. However, ZipMex has a product on the exchange called ZipUp that effectively lets users move funds under the Singapore entity to earn yield. The source explained that the funds were given to Babel to generate the yield. About $100 million was lent to Babel, which is now at risk of default. In June, Hong Kong-based asset manager Babel Finance halted withdrawals, due to unusual liquidity pressures. Southeast Asia has not been shielded from the bear market crypto contagion, as in Singapore, Vault Exchange recently froze customers' funds. Nexo has reportedly offered a buyout, but the group also offered to buy out Celsius. When pressed on whether ZipMex could face the same consequences as Celsius, the source commented that it's possible. Babel hasn't settled their default yet, and it's a $100 million hole. Celsius froze users' funds on June 13 and many fear the exchange could suffer the same fate as Mount. Gox. In response to the allegations, Lim said that it was business as usual. Lim emphasized that the group doesn't comment on rumors. A senator blasts second for non-judicial actions against crypto companies. Senator Emmer highlighted the second's politicization of regulations and called them power-hungry regulators that discourage good faith regulations. Tom Emmer, the Republican senator from Minnesota, has become the latest politician to blast the United States Securities and Exchange Commission, SEC, for its unethical actions against crypto companies. Emmer posted a video on Tuesday showing his conversation at the House Committee on Financial Services, where he accused the SEC of politicizing regulations. He went on to grill SEC Enforcement Director Gurubir Grewal over SEC's unethical industry sweeps against crypto companies. The senator further inquired if these sweeps against crypto companies fall under the jurisdiction of the SEC, and what actions the Commission takes against companies that don't volunteer for such voluntary questioning. Grewal admitted to using enforcement actions against companies that are not under their jurisdiction. Emmer said SEC was using its enforcement branch to unconstitutionally expand its crypto jurisdiction. Emmer also accused SEC Chair Gary Gensler of baiting and threatening companies, he said. Under Chair Gensler, the SEC has become a power-hungry regulator, politicizing enforcement, baiting companies to come in and talk to the Commission, then hitting them with enforcement actions, discouraging good faith cooperation. Emmer said SEC's behavior was absolutely unacceptable and believes the regulatory body is not regulating in good faith, especially when it comes to the digital asset market. Brad Sherman, the congressperson who previously called for banning cryptocurrencies in the U.S., also blamed SEC for its enforcement approach against major crypto exchanges. Sherman accused the SEC Enforcement Division of going after Ripple, XRP, as a security, but not the crypto exchanges that process tens of thousands transactions of the token. Many in the crypto industry were hopeful that Gary Gensler's appointment as SEC chief would prove beneficial for the crypto regulations, given his crypto/blockchain background. However, on the contrary, Gensler's approach has been quite opaque and unethical. US federal agency issues legal advisory on NFT investments. The advisory primarily targets reporting of NFTs investments that represent property, such as real estate. The United States Office of Government Ethics, OGA, issued a legal advisory recommending various instances when senior government officials are required to disclose their investments in non-fungible tokens, NFT. In the legal advisory presented to the designated agency ethics officials, Director Emery Rounds III said that all NFT investments, both fractionalized, FNFTs, and collectibles, worth $1,000 must be reported if held for investment or production of income at the end of the reporting period. The guidance provided by the federal agency also requires reporting of NFT investments if officials made profits over $200 during the reporting period, adding that public financial disclosure filers must also disclose purchases, sales, and exchanges of collectible NFTs and FNFTs that qualify as securities. The advisory primarily targets reporting of NFTs investments that represent property, such as real estate. However, the OGA previously ruled that personal assets, including clothing, electronics or family photos, or NFTs representing the same, are not reportable. Based on the circumstances disclosed by each filer, collectibles may or not be required to disclose as financial investments. Rounds laid down 7 questions to help filers self-determine their reporting requirement. Filers have been advised to use the OGA Form 278E for reporting NFT investments, wherein investors must include details such as the value, income type and income amount of all eligible NFTs. The OGA revealed to continue monitoring advancements in crypto and modify the above guidance as deemed necessary in the future. Congressman Brad Sherman advised the Securities and Exchange Commission, SEC, to pursue securities cases against cryptocurrency exchanges with fortitude and courage. Highlighting SEC's attempt to investigate crypto exchanges, Enforcement Director Gurbir Grewal referred to a case brought against Poloniex in August 2021. However, Sherman pointed out the need for pursuing investigations against bigger exchanges such as Binance and Coinbase. The big fish operating the major exchanges did many tens of thousands of transactions with XRP. You know it's a security, that means they were illegally operating a securities exchange. They know it's illegal because they stopped doing it, even though it was profitable. I hope you focus on that. Tesla sold 75% of Bitcoin holdings in Q2. Elon Musk's electric vehicle maker has offloaded most of its BTC reserves, according to financial statements released on Wednesday. Electric vehicle maker Tesla sold most of its Bitcoin, BTC, holdings in the second quarter, according to new financial disclosures released on Wednesday. As of the end of Q2, we have converted approximately 75% of our Bitcoin purchases into fiat currency, Tesla said in its quarterly statement. Conversions in Q2 added $936 million of cash to our balance sheet. According to the financial statements, Tesla's net digital asset holdings were relatively stable for 3 consecutive quarters. By the end of March, Tesla had $1.261 billion worth of digital assets on its books. Following the liquidation, the firm now has $218 million in digital asset exposure. The electric vehicle maker sold a portion of its BTC reserves in March 2021, realizing a net profit of $128 million. At the time, CEO Elon Musk explained that the sale, which amounted to 10% of Tesla's holdings, was to prove liquidity of Bitcoin as an alternative to holding cash on balance sheet. Just 2 months prior, in January, Tesla became one of the largest corporate holders of Bitcoin after it bought $1.5 billion worth of the digital asset. The purchase was disclosed in a February filing with the United States Securities and Exchange Commission, or SEC. Bitcoin hodlers will soon see why $21,600 BTC price pump is fake, trader. Suspicions over weekend strength come as traders send 17,500 BTC to Binance in less than 24 hours. Bitcoin, BTC, spiked to 1-week highs on July 17 amid warnings that traders should not trust current BTC price action. Binance inflows see multi-week high. Data from TradingView showed BTC/USD reaching $21,600 on Bitstamp, its best performance since July 10. The pair saw a fresh leg up during the weekend, this nonetheless coming on the back of thin, retail-driven out-of-hours liquidity with institutions out of the picture. With Bitcoin prone to fake-out moves both up and down in such conditions, there was thus little appetite to believe that current trajectory would endure as the weekly close loomed. Don't let CT, crypto Twitter, noise change your vision of how things really are, popular social media account, El Capo of Crypto, told followers on the day, referencing crypto Twitter narratives. Not worried about this scam pump. Still fully out of the market, soon you will see why. Also preparing to exit the market, it appeared, were traders, as major exchange Binance saw heightened inflows in the 24 hours to the time of writing. According to data still being compiled from on-chain analytics platform Cryptoken, on July 17, inflows neared 17,500 BTC, the most on a single day since June 22. Nonetheless, some commentators remained upbeat on the short-term outlook. Overall, strength is still there and I'm assuming further upside is happening. Crucial barrier for now, $21,000, he had explained prior to the move. Potential upside targets included $22,000 and the 200-week moving average at around $22,600. The latest order book data from Binance via Analytics Resource Material Indicators meanwhile showed a fresh wall of buy support clustered at the $21,200 breakthrough point, worth some $20 million. Weekly close keeps chart narrative fluid. On weekly timeframes, the July 17 close had the potential to be significant. At $21,300, Bitcoin would not only seal its second green weekly candle but also its highest weekly close since early June. A matter of $500 nonetheless stood between that outcome and the continuation of the downward trend since the July 10 close had come in at around $20,850. That event, popular trader and analyst Rekt Capital noted at the time, marked a lower high for the week, alongside declining buy-side volume. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.